Hello everyone, welcome to this another session on dollar INR. It is the last working day of the week and rupee is in a massive soup. The kind of volatility that we are seeing in dollar INR and the kind of volatility we are seeing in Brent. Okay, so let us try and evaluate, try and make some sense in this chaotic time. What is happening and what should dollar exporters and importers do? Okay, so the first chart is on the Brent, the crude prices. Okay, so if you look at crude prices here, we have seen a massive jump and then some kind of a stability for a few days, and then we have seen a big jump again, and for the last 2-3 days we are seeing some kind of a movement between 107.67 below and 112, 13, 14 on the higher side. So crude is boiling, Brent is boiling, it is still very high and it is dramatically reacting to the events in the Middle East. Okay, so if crude is higher, then obviously all of us can understand and evaluate the pressure on rupee. But in crude, do recall that we saw a big up gap here, which was the beginning of the war, and then we saw a decent gap up here as well when those oil facilities and gas facilities were attacked. Okay, so huge chaos in the Middle East. Brent is boiling. Let's try and see what is the impact on the rupee. Okay, obviously it's not going to be a very comfortable time for the rupee. Rupee opened today at 92.91 compared to Wednesday's close of 92.63. Remember, yesterday the markets were closed, so there was a good 18 to 20 to 25 paisa gap up opening in the dollar INR, and from 92.91, which was the morning level, today it closed at 93.71. Okay, 80 paisa higher compared to the open and more than 1 rupee higher compared to Wednesday's close. So that is dollar closing higher and rupee closing lower. So massive weakness in the rupee. So if you see this chart, what we have been following, so there is a big jump in the rupee on the daily chart. Okay, NDF is showing slightly lower, but in the onshore market, it has closed at 93.71, the highest that we have seen in the dollar INR ever in the history of the markets. Okay, so it's a very perilous, very dangerous time. So in these kind of situations, what should exporters and importers do? Okay, so let me start with exporters. Very simple, don't do forwards. Okay, so that is the foundational principle that I am trying to tell you. Exporters, please don't do only forwards. Okay, if you feel the levels are fantastic and I need to encash, you can do some small bit of forward, but what you need to do more is simple vanilla options. Just imagine if you would have done vanilla options at 91, 90, 91, 92 spot, what we have been telling for a very long time, do vanilla options. If you would have done 91, 92 at those spots, if you would have done vanilla options, you are completely benefiting on the rupee weakness. You are capitalizing on rupee weakness. But if you would have done forwards, then all those forwards are out of the money. Okay, so very, very clear guideline to all dollar exporters. Do some very minimal amount of forwards. Majority of your hedges should be vanilla options. Obviously, the option premiums are higher, but just remember from Friday till today, it is 1 rupee higher, and typically 1 rupee premium is for a 4-month protection. So if you look at a 1 month, 2 month or 3 month vanilla puts, it will come much cheaper. You can reach out to us if you need option pricing, but vanilla options and vanilla puts are the only solution for dollar exporters. Okay, so what is there for dollar importers? Dollar importers, since the rupee is weakening continuous unabated, so you should look at doing some forwards, but the spot has reached very high. There could be a counter argument that it is just too high, the war might cool off and the rupee might gain. No one knows when the rupee is going to gain, no one knows when the war is going to cool off. Okay, so you should do some kind of a forwards. Take this as a very painful experience. It is painful for all of us, and you should also do some kind of a vanilla options as well. If war does cool off and rupee gains, you can participate in that rupee gaining period. Vanilla options will help you do that, but you should certainly do some kind of a firefighting exercise and hedge using forwards. Okay, so for dollar importers, it is a good amount of forwards and some vanilla options for flexibility. For dollar exporters, very small amount of forwards and majority vanilla puts, dollar puts for benefiting to capture from the rupee weakness. Okay, so that is it from my side. Have a great weekend ahead.